Like Mark Mobius joins us now. Always a pleasure and delight to have him on ET Now. Mark, so nice to have you
Hi,
back
how
on
are
ET
you?
Now. Thank you for joining us. My first question is always, from which part of the world are you joining us from?
I'm now in Dubai.
You've been in Dubai for a while, Mark. That's very unusual of you. Same place for more
Yes,
than 2 weeks.
actually, I leave for Australia next Wednesday.
And when do you come to India next now?
Then I'll come to India in February. Yeah.
I'll look forward to meet you. But before
Yes.
we meet you in person in our studio, let's understand your view on the market. 3 weeks ago, it appeared that emerging markets were on a back foot, and especially India. India was losing out to China. India was losing out to the dollar strength, and flows were gravitating back to US. Is the long dollar emerging market short trade over?
I think that we're in a situation where the dollar will continue to be strong, but the strength has already been done. In other words, anticipating the incoming new president, President Trump, the dollar was getting stronger, and now I think it's reached the point where it will begin to level off. So I don't think you're going to see much more weakness in the rupee. Maybe a little bit more weakness, but not very much.
Mark, the long-lived China trade, which is that China was cheap, China was underperforming, it was time to go back to China. That trade lasted for less than 3 weeks. Why is that? And is that long China trade over?
I think China is not going to be able to recover to the degree that people expect for a number of reasons. First of all, the growth rate is not up to where it used to be, and for good reason, because it's such a big country now. The GDP has grown so much, very difficult to have 5, 6, 7% growth like they had in the past. The other thing, of course, is that the private sector still is somewhat suppressed. The government has been very negative on the private sector, and I believe that although they've changed the tune a little bit, still there's some pressure, and that means that growth in the sector, the various sectors in China, will not be very good. There'll be some exceptions, such in the electronics and software area. Maybe you can see some good opportunities, but otherwise, I think it'll be difficult to have the kind of performance that we've had in the past. And of course, India is recovering from the recent downturn. I think India will continue to do very well and outperform China.
Do you think Indian markets have bottomed out, and what we saw was more like a bull market correction, even though it was more than 10%?
Yes, I think it was just a correction, and it's recovering and will continue to recover.
Last time when we spoke, you said that if you had $100 million, you would put $50 million in India. So have you
Yes,
actually done that?
yes, my own personal money, yes.
Have you increased your India allocation? Have you added more stocks in the recent leg of decline?
Well, I already was pretty heavily weighted in India, and I probably will keep it at that level.
So what kind of future returns do you expect from India in local currency terms, not in dollar? Because the minute you put in dollar, it gives you a different dynamic. What do you think
Yeah.
should be return expectations from India next 12 to 18 months?
20% roughly, about 20% you'll see in India for the growth. I think it'll do very well.
The concerns mark what market men had, which was centered around the fact that Donald Trump comes, that is higher tariffs, that's bad news for India and China. Do you think the fear is unnecessarily been heightened?
Well, the situation with the Trump tariffs is going to be positive for India for a number of reasons. First of all, there has been shifting of manufacturing from China to India. It's already begun. But more importantly, as the higher tariffs hit China, China will be very eager to diversify their manufacturing base. They already have labor situation where the aging population and shorter growth rate will mean that the number of people able to work in factories will be less. So a lot of this manufacturing, high labor contact manufacturing, will be moving to India. And with the higher tariffs on China, that will be accelerated. Of course, the manufacturing from China will not only move to India, but to other parts of the world. but I think India will be a big beneficiary of this movement. So in some ways, the high tariffs that Trump is introducing is going to be very good for India.
Mark, if one scans through your portfolio, technology makes up for broadly 50% of the total allocation. Why is that?
Yes, because that's where the growth is. If you look at the growth rates of companies in the technology sector, and by the way, not only technology per se, but companies that are using technology are growing faster simply because the technology provides more efficiency, faster turnaround of products, etc. So I think it's important to be in technology, but we're not exclusively in technology.
So, Mark, among some of your old holdings, you've been consistent with Bharti, you've been consistent with 360, and you've been consistent with Persistent and APL Apollo. Do you plan to own these three of your old-timer stocks for a long period of time?
Yes. Whenever we buy something, we intend to hold it for a long period of time, unless things change. And of course, we're looking at other sectors as well. I'm particularly interested now in the aerospace sector in India. I think companies like Bharat Electronics are going to be very interesting going forward. So we're looking at that. And of course, software continues to be a big target for us. And we're looking at a number of software companies and companies, by the way, that are doing backroom kind of processing, paper processing. You know, there's still a lot of work to be done in that area, despite computerization. You have companies like Central Depository that needs to do a lot of paper processing in addition to computer processing. And of course, with technology introduction, that work will become much more efficient.
Mark, what is your view on Adani group of stocks, considering that there were bribery charges which were, in a sense, framed against the key officials? The stock reacted to the news but now have recovered. What is your view on that news, and especially Adani group of stocks?
Well, first of all, I think the Justice Department in the U.S. probably overstepped its bounds. It's gone too far. And by the way, with the introduction of Trump, I think a lot of the work of the Justice Department going overseas to prosecute companies around the world is going to come down. They're going to be cutting that kind of work. The other thing, of course, is that we have to look at the evidence. Where is the evidence? And you know, a lot of it is hearsay, but we have to look at the actual evidence. So I wouldn't condemn Adani immediately. I would first want to see evidence. And besides, the Justice Department in the U.S. really has no business prosecuting an Indian company.
So did you buy Adani group of stocks in this decline when they fell 10 days ago?
I was looking at it, but it moved up too fast.
There are about half a dozen Adani group of stocks listed, and now they represent a variety of businesses, from Adani Enterprise, which is the holding company, Adani Port, which is in the port business. You've got energy businesses like Adani Green. You've got cement businesses like AC and Ambuja. Where would you be leaning within the Adani group to find value?
I think probably on the infrastructure side, because that's where they have an incredible expertise and global view. So I think that's one area that power and infrastructure would be probably most interesting at this stage.
In general, do you like power stocks in India?
What type of stocks?
Power stocks.
Power. Oh, yes. Yes, some of the power stocks look quite interesting in India. And it's interesting to note that even the coal burning power stocks have done quite well around the world. In fact, coal prices have, as you know, have gone up very much. So there's still an incredible demand for power in any direction, whether it's coal, solar, gas, or oil.
Mark, you own both Vodafone Idea and also Bharti, which means you're very bullish on Indian telecom sector, because out of three players, if you own two, which means you're extremely bullish on that sector. What makes you bullish on them?
Well, simply because it's a growth area. You know, the telecom sector is an area where more and more people are using cell phones, using all kinds of other gadgets that depend on the telecoms network. And the network is becoming more extensive and deeper. In other words, it's becoming more efficient as we go forward. And the technology, of course, is having a big impact. So I would say that telecoms, not only in India, by the way, but globally, is going to be very good.
Marv, if one looks at the way how mid and small cap stocks have moved in last 3 years, the belief in India with a lot of investors is that Indian mid and small cap stocks are trading way above their fair value. What are your thoughts on that?
Well, what happens is that these small and medium cap stocks, if they're doing very well, are destined to enter the index. And once they enter the index, then the stock price has a pop and they move up. And that's probably one of the reasons why you've seen valuations on these small and mid cap go up, because it's in anticipation, if they're doing well, if they're having good earnings, anticipation that they will enter the index and thereby become widely held. The other interesting thing about this small and mid cap is that many of them are not being followed by brokers and other researchers. And once they get the attention of these market researchers, then they move up. So there are a number of factors like that, which explains why the valuations are at that level.
Mark, why are we seeing such a synchronized bull market, starting from bonds to Bitcoin to financial assets and even gold? It is normally believed that if one asset does well, the other asset has to go down. That's how asset allocation has worked. But right now we are seeing what could be called as a synchronized bull market in US equities, in Bitcoin and gold.
Yeah, the reason is very simple. It's all about money. Money supply in America as a result of the COVID efforts to revive the economy meant that the Fed was printing a lot of dollars. Money supply went up by 30+%. And whenever you have money supply moving up at that rate, you know that inflation is going to follow, probably about 12 months later. And that's what we saw. That's, of course, why the Fed has been trying to restrict money supply. Money supply now is beginning to move down, but the effect of that will not happen for another year. So during this time of easy money, of excess money, people, of course, had money to put into speculative assets. But more importantly, people realized that in order to retain the value of their money, they had to go into stocks. Because the great thing about company stocks is that they adjust, earnings adjust to inflation, to additional supply of money. So that's the best way to preserve your capital. So that's what's happened.
Mark, how exactly do you think the first 100 days of the Trump administration would be impacting the market mood? Because there are a lot of assumptions from Donald Trump 2.0. He will increase tariffs. He will boost manufacturing in US. He will go against emerging market imports. Do you think all that and much more is in the price, of financial markets could still surprise us?
I think financial markets could still surprise because I think if you talk to any economist, in fact, recently I was on a panel with American economists, and they were all rather negative about the ability of Trump to put through on the various reforms that he wants to introduce because of congressional problems. But you must remember that now in the US, both houses of Congress are Republican. So it will be much easier for him to get his reforms through than when he was president last time, when there was a lot of opposition with a House controlled by the Democrats. So with that kind of environment, we may be surprised that Trump gets through a lot of these reforms. First of all, reforming the government, going after the Justice Department and particularly the FBI to reduce their powers, their politically oriented powers. The other is, of course, reducing regulations generally. You must remember that uh, reducing taxes is fine for business in America, but more importantly, getting rid of the excess regulation is going to be a big boon for companies around America, particularly the small and medium-sized companies that find these regulations to be very, very expensive to adhere to. So these effects will filter through to the American economy. And you must remember that a prosperous American economy will be good for the rest of the world because American consumers will be richer and they'll be able to buy more, not only from American manufacturers, but from people around the world. So I think we probably will be quite surprised to see what happens after Trump takes office.
Mark, it is generally believed that what is good for what is bad for China is good for India, which is that Donald Trump will impose more tariffs on Chinese imports. That would benefit Indian markets and Indian companies. Are you investing into Indian companies which have presence in manufacturing and which could gain if tariff war starts or if tariff imposition starts?
Yes, of course. It's very important to look at that effect. But you must remember, it doesn't necessarily follow that a benefit to India will be not a good thing for China. As I mentioned, China is eager to diversify its manufacturing because of the American tariffs and for other reasons, simply because of labor shortages. So Chinese companies going into India to manufacture will benefit from what's happening in India. And by the way, India will also benefit from this kind of transfer of technology and knowledge. So I always tell my Indian friends, don't be afraid of the Chinese. You should welcome them into India because you'll learn a lot from them about manufacturing, exporting, etc. And it will be good for both sides. So it'll be very interesting to see what happens.
Mark, with the exception of, let's say, ICICI Bank and Bharti Airtel, I don't see too many large cap stocks in your declared portfolio. Why is that?
For the reason I mentioned, the large caps are already popular. They're well researched. Everyone knows about them. They're in the index, whereas the medium and small cap are not very well researched and are not in the index. So the possibility of them going into the index is meaning that the price will move up very nicely when that happens. But more importantly, it's good to be on the other side of the information gap. In other words, when people know a lot about a stock, then all the news is out, and the possibility of a share reform, a share price change is small. But when you have the opportunity to research a company that no one else knows about, you have a chance to outperform. So I think it's very important that we look at that situation with the small and medium cap companies.
Mark, I distinctly remember last time when we spoke, you said that you bought into metal stocks because you found them cheap. Now that the China trade has reversed, would you still stay invested in metal stocks?
Yes, I will definitely look at those. There's no question about that. You must remember, it's not a matter of looking at a sector, but looking at individual companies, because you will find that in any sector, there are some outstanding companies, and you don't want to say, "Oh, I don't like that sector for one reason or another," because you may miss out on some individual companies that are doing very, very well and will continue to do well going forward.
Mark, so just to wrap it up with one final question, if Mark Mobius has the option of just punching in one trade for 2025, it could be any asset, long or short, it could be a country, it could be a mid cap or a large cap stock, which is that one trade you would like to punch and given in choice for 2025?
Well, I would say again, India stocks, but particular Indian technology stocks, and more specifically, semiconductor manufacturing and companies related to semiconductor manufacturing in India.
You know, Christmas is round the corner, and how about giving a Santa gift or a Christmas gift to our viewers with a stock name?
Well, a nice
Come on, you have to be a
portfolio
Santa
is
Claus. So come on, Mark, you have to be a Santa Claus this time.
Well, I hope that buying our fund will really do the trick.
Mark, it's only meant for HNI investors. Come on, Mark, be a Santa Claus. Once in a year, Santa comes.
You want one stock or one fund?
One stock, which we can call as Mark Mobius Santa gift or Christmas gift.
Well, I would say, again, it's no guarantee. And I must say, I'm not buying the stock yet, but a company called New Gen Software would be a good one to look at.
Okay, Mark, now you've been a real true Santa for our viewers, and thank you for that Christmas gift. Appreciate your time and certainly hope to see you in February when you are in India.
Thank you. Look forward to it.
Thank you, Mark.
If you like this video, then like, share and subscribe to ET Now.